This is 9 News with Peter Overton.
Good evening. The Reserve Bank has delivered long-awaited rate relief. The board voting unanimously to slash the official cash rate by 0.25%. The move welcomed by millions of mortgage holders and the Treasurer. But there are concerns tonight it could fuel the housing crisis. Our finance editor, Chris Kohler, begins our coverage.
Michelle Bullock made Australia wait, but relief is here.
Today, the board decided to cut the cash rate by 25 basis points to 3.6%.
The third interest rate cut of the year, taking the official cash rate from 3.85% to 3.6%. The board unanimous in its decision, despite saying it remains cautious about the outlook.
The answer is no. There wasn't a discussion of a larger rate cut.
But today's cut helps all the same. Those with a $500,000 mortgage will save $74 as a result of this August rate cut. A $750,000 loan will become $111 cheaper to service each month, and repayments on a $1 million loan will drop by about $148. And this is the third rate cut, so those numbers are adding up, and the situation is finally improving for borrowers.
Today's decision is welcome, and because it puts more money into the pockets of millions of Australians who are still under pressure.
It's the news Tyler Wilsmore and his family had been waiting for.
It is a significant decrease in terms of what's out of my pocket to hold my mortgage and to hold my properties.
He's eager to expand his property portfolio from 2 houses to 3, and loan and advice providers say buyers are flooding back.
Yeah, people were frozen just waiting for that signal ready to go. Our investor inquiry has basically doubled.
Today's interest rate cut will provide relief for those with a mortgage, but it also means Australians will be able to take on more debt. In fact, somebody earning $50,000 a year will be able to borrow an extra $4,000, while somebody earning $100,000 a year will be able to borrow an extra $11,000. And that extra financial firepower will push up property prices. To what extent are you concerned with what might happen to property prices as a result of 3 or more interest rate cuts this year?
The easing so far has been fairly gradual, and what we've seen so far is a fairly gradual recovery. We hope it happens in a nice measured way, but ultimately we don't forecast property prices.
So that's the sting in the tail of all of this. It's good news for those with a mortgage, lower interest payments. On the face of it, it looks good news for those trying to get into the property market, but the flip side is that it will mean higher prices.
Showing respite is in the eye of the beholder. Chris Kohler, 9 News.